Hey guys, thanks for joining me for a September 17th edition to what happened in the crypto markets. It was a pretty jam-packed day, actually, with a lot going on. The market's moving quite a bit. So happy to give you guys an update. We're going to talk about Hester Pierce. She is the SEC commissioner. She maybe is the savior that we need but do not deserve. She had some great comments today at a conference. Love to dive into that. I think it's a pretty impactful and perhaps gives us an indication on potential SEC policy in the future. Also, obviously, a Bitcoin update, quant model, what's going on in terms of buys and sells. It kicked ass again today. Performance is kind of out of this world, so doing well so far. Also got a pretty beginning stages of a decent alt season indicator, looking at dominance. So we can take a look at that. First, I just want to make a comment about all the rough weather out there, whether you're in North Carolina or Southeast Asia. Just, be safe out there. And honestly, it kind of grinds my gears that we got some weather stations out there over dramatizing some of what's going on, especially with Anderson Cooper filming in a ditch, or that one video of, the guy faking the wind and the people walking behind him. That's just a joke. And honestly, these days, when lives are at stake, we need to have kind of real news, especially when it comes to, weather. But also, I think it's a bit sad. I live in the United States, and there's basically been no coverage of the typhoon out in the Southeast Asia region. We're all in this together, and we certainly should be pulling for each other, whether or not it's directly affecting, our own country. All right, so switching gears a little bit, as you might notice, I got my Tampa Bay Buccaneers hat on. So it kind of lends me to something I posted on Twitter today. For those that do not know, the Tampa Bay Buccaneers are an NFL team, American football. They were 2-0 this year, and honestly, they're not supposed to be 2-0. They were supposed to stink pretty badly. And this is a good lesson in terms of trading, as well. The path that actually happens, what actually happens in real life, is not always the most likely path or the base case. It could very well be the least likely path. What happens is just one path through history. So when you're trading, when you're analyzing a company or a coin or anything like that, you have to understand there's many, many, many things that could happen that all have their own probabilities. So you cannot get married into one outcome, because if you do, you can easily get burned. Just keep that in mind. I like to say I like to be ready for the best. So, I have my portfolio position to take advantage of to get things that could happen, but always be prepared for the worst. So I know that's not very fun. Everyone likes to say, oh, it's going to 3K and there's nothing you can do about it, or we're going 100,000, but the reality is it could do both. And so we got to be prepared for both cases. So just keep that in mind. So let's kind of jump right into the Hester Pierce comments. I got a little slide deck for you. So we will jump right in. All right. So again, this is Hester Pierce, the savior we need, because I think we certainly need some allies in government. And honestly, her attitude and her view, honestly, I think she's quite brilliant. Gives me kind of some faith in government again, in some ways. So let's kind of dive right in. Who is she? She's a SEC commissioner. She was the dissenting voice, the one who wrote the dissent in the Winklevoss ETF decision. Just recently, we had 9 ETFs denied. That was actually done by SEC staff. She forced that those denials to actually be reviewed by the commission, which I would still expect them to be denied. And she certainly is free market biased. Some other key SEC notes. The commission is supposed to have 5 people, but right now has 4. Well, technically has 5 now, because one new person was just got on the commission, and that is Elad Roisman. I have no idea if I said his name correctly, but he's a Bitcoin ETF supporter. He's definitely a crypto ally. So So at minimum now we have, Hester, who is without a doubt a major ally, and the new guy who is supposed to be a pretty good ally. And also what's important to know is another person is leaving the commission. So you're going to go back down to 4 with 2 potential allies and 2 people that voted no. So for example, the Winklevoss decision was 3 no votes to 1 yes. But now with kind of the seats shuffling, you might be down to 2 yeses, 2 nos, and much better ETFs on the docket. So just keep that in mind. So what did Pierce speak about? So she was at a conference called FinTech Unbound. And honestly, I have some excerpts here, but if you have a chance, certainly go read it. It is a very, very brilliant and a lot of good comments here. So here are some of my favorite parts. So basically, she starts with basically an analogy about motherhood and how some moms or parents like to be helicopter parents, where they basically watch over every little thing their kids do, and some parents let their kids kind of do more and learn as they go. So, but what she really recognizes is that the role of the SEC is not to necessarily be a helicopter parent. It's in some ways to kind of let the investors kind of free range a little bit, because something's always going to go wrong. She mentioned that, whether companies fail, fraudsters cheat, etc. But I think the key comment here is the last line, the last paragraph. But the losses of prohibiting risk-taking are also real. So there's a consequence, an opportunity cost by denying ETFs or by denying crypto, or just not allowing the free markets to reign. There's consequences to that. And even though you don't necessarily see them, because literally by definition, the ETF's not allowed, but there's certainly consequences, and she recognizes that and goes through them later on. And this, again, all these paragraphs are awesome, so certainly read it. But the key point here, I wrote down below, the SEC should not attempt to be a risk management tool for the investor. So what we all have to understand when you're building portfolios for your 401k or your crypto portfolio, whatever it might be, that there is some connection between risk and return. The more risk you take, whether it's a bunch of cryptos and stocks, the more return you should expect. If you're in a bunch of money markets or bonds, you should expect a lot lower return. And our point is, it's not up to the SEC to determine how much risk somebody should take. That is up to them. And whatever their risk appetite is, whatever they choose with their advisor, or however they do it, that is their choice. And that the SEC should not, it's not their role to help determine that. Now, we're starting to get into the more of the nitty-gritty details here. And this is what she was talking about in terms of consequences of not allowing, say, a Bitcoin ETF, which is stringent regulation. So the first line, as the world becomes increasingly integrated, asset classes that were once uncorrelated grow more correlated. New asset classes might help diversify portfolios, such as cryptocurrencies. So what this means is, this is what I do, for a living. You build, portfolios. You want one asset to zig and another asset to zag. That's one way you can manage your risk. So what she's saying here is, yeah, all equity markets are becoming very correlated. Globalization is happening. So if the markets tank in the US, they might tank globally. So we're just speaking equities here, but there's a lot fewer places to hide. So it's very nice when you have asset classes like cryptocurrencies that provide diversification benefits. It's a good way to help manage your risk. So what she's saying here is, by not allowing a Bitcoin ETF, you're actually making it more difficult, more challenging for investors to manage the risk. And also, I think she makes a great comment here about some of the technical know-how, but yeah, I'll kind of put it in my own words. But by not allowing cryptocurrency investment, the SEC is forcing investors to jump through major hoops in order to achieve these better optimal portfolios, better managed risk portfolios. Worse yet, investment in crypto requires a significant amount of know-how. You're basically discriminating against the masses. So she even admits she's not technical enough to be able to invest in crypto. So what's happening now by having to whether do Coinbase or Binance, Gemini, wherever we're at, it's not easy for the 99.9%. So we're discriminating against the untech knowledgeable. That's certainly not the role of the SEC. Here's another couple of great paragraphs here about how she's talking about the SEC denial of the Winklevoss ETF. And her worry here is the SEC is beginning to make the appearance of doing due diligence on the Bitcoin markets. So here's a sentence in the middle of the first paragraph. The Commission's order included assurance that this approval does not rest on the evaluation whether Bitcoin, blockchain, has utility or value as an innovation or an investment. Now, this is a member of the Commission speaking. The order, however, seemed to do almost that. It focused on the alleged flaws of Bitcoin markets rather than whether the exchange proposing to trade shares of the trust had taken steps to ensure the orderly trading of those shares. The focus on lack of regulation in crypto troubled me. What authority do we have to require assets underlying securities be regulated as if they were securities? Even if we had this authority, private markets can and do regulate themselves. So I read a lot there. But basically, if you are a free market person like myself, that should get you extremely excited that we actually have people in regulatory bodies thinking like that. And that's quite amazing here. And now she's, in these next couple paragraphs, further going along the lines of the danger of making it seem like they're doing due diligence on Bitcoin by looking at the markets, seeing if they're manipulated, all that stuff. Because what she's saying is the consequence of giving that appearance is that once they do approve something, and something will be approved at some point, and if not, we have vehicles that are going to be in, through ICE and NASDAQ, et cetera. What she's saying is once these approvals happen, it gives the appearance that the SEC is blessing the markets. Again, that is not their role. So she makes it very clear that if we're denying based upon the Bitcoin market being unregulated or having manipulation, then approval implicitly means that they approve of, or those issues have gone away, where clearly investors have to do their own due diligence. And she also mentions 5 key SEC lessons. I think these are very important too. I know this might be a little boring for some of you, just wanted to get some altcoin picks and a Bitcoin update, but this is kind of the macro big picture, and we all need to know this to be able to navigate crypto well over the next quarter or two. So this is the first lesson. Basically, she admits that the SEC, they are not tech people. They're not innovators. That is not their skill. They're lawyers. They are neither qualified or mandated to determine which innovations are positive or viable, meaning it's not their job to determine if this blockchain is good or bad. So that's important to note as well. So what about the second lesson here? And she mentioned this previously in some paragraphs I didn't include about the Swedish cryptocurrency products that they just put the halt to. But here, what she's saying is no matter what the SEC does at this point, it's not going to stop the wave of crypto. So they can't be ignorant. They can't put their head in the sand. They have to recognize they really only have 2 choices. The third choice of, say, quote unquote, banning it and having it go away is not an option. It's just not feasible in a global society. So their 2 real choices are you give innovators and investors reasonable regulations and some safeguards, or 2, and I put this down, force investors into the Wild West, where she was a bit more eloquent than me, and where she put prepare for investors to seek out such innovations in the less regulated or unregulated spaces such as foreign registered products that lack the transparency that trading under our rules would provide. So, in many ways, it's the lesser of two evils if you are a pretty anal regulator, but that is the reality that Hester Pierce says that they need to recognize that they live in. Third point here is also that technology is fast moving. Regulations are very slow typically, and it is their duty as regulators to provide clarity, clear and concise clarity, and not make it so that innovators, whether it's in crypto or just fintech in general, are effectively scared to ask questions. So that's good, because certainly, one thing a free market person like myself would want, besides very limited regulations, would be very clear regulations. And then here, this is a couple good paragraphs worth a read, but really what she's recognizing, this is a key point of crypto period, is that new technology gives access to people that could not attain it. And this goes back to a previous point I made, that right now, that crypto, the only people that really truly can invest in it are people that have a halfway decent knowledge of technology. Well, here it's a similar argument, but saying crypto can really help people that are discriminated against or less well off, or born in certain areas of the world, whatever it might be. That we have to recognize that, and we just can't be continuously trying to put a square in a round hole. And the last lesson here, it's also about innovation. She recognizes innovation occurs mostly with smaller firms. So if you have a huge regulatory burden, it generally pushes out the innovation, because smaller firms cannot actually deal with all the regulatory issues. You need an army of lawyers, things like that. So we need to make those rules a bit more friendly for innovation, that the SEC's role is not to stifle innovation in any way, shape, or form. And here it's very similar. This is the last, I think, second to last paragraph she wrote. I'll quote most of it. The tech revolution in the financial industry is very exciting. New asset classes like crypto and new ways for financial companies to communicate with investors are likely to make our world look very different 10 years from now. As a regulator, one who's not adept with new tech, humility is, as I've noted, important. I do not know which technologies will succeed. And processes need to change to make the US a comfortable home for the next generation of innovators. I think just her attitude here is something we all could read and take a little page out. We all have our strengths and weaknesses, and it's important to recognize the weaknesses. Like she mentioned here, she's not adept to new technology, and she does not know what technologies will succeed or fail. So instead of kind of overlaying her own kind of risk-averse bias, her job is not to assess the merits of those different products and services. So I think it's very important that we all take a page of humility and just recognize your own weaknesses. And yeah, so that was Hester Pierce. I think some great comments here. Certainly a major ally to crypto, not because she loves crypto, but she loves the spirit of what crypto stands for. And I think that would be, free markets and just allowing people to make their own choices, whether it's, good or bad. So, that is Hester. Then we can kind of switch gears a little bit to Bitcoin dominance and just kind of a Bitcoin update in general. So as most of you know, if you've been watching the markets today, they are down about 4.5%, which is not good, but is not that big of a deal. If you watched my Mastering Volatility little episode, you would recognize that 4.5% loss is a pretty standard occurrence in crypto. So if crypto has, or Bitcoin in general, has a 4 to 5% daily volatility, that means a little over 1 day a week, you should see a loss of 4 to 5% or more. Overall, it's not quite 3 times every 2 weeks, but between 2 to 3 times every 2 weeks, you should see a loss day like today, if not worse. So it's not something that's out of the ordinary. It's not something to get worried about. We're still definitely in the same range we've been in many, many times over the past few months, and really what we've been in over the past week or so. So certainly really no major change. We just got a bit more complacent with low daily intraday volatility over the past few days. That kind of just jumped up. But other than that, we're basically exactly where we've been. We had some alts really spike up, so that kind of got people excited, but that's really just a blip on the radar. In terms of certain metrics, RSI was certainly oversold earlier in the day if you looked at, say, the hourly, but now it's kind of getting closer back to normal. The 2 and 4 hour are still a little oversold. Last I looked, Bollinger Bands really blew out, as well. So I wouldn't be shocked to see a little bit more of, volatility either direction. But overall, I think it's still pretty safe to say the support here, whether you define it as 5,800, 6,000, I'm not, as you know, I'm not too worried about $100, $200 in Bitcoin, given its volatility. That support still hold. So unless something major happens, but you never know. And as I showed you guys with my Buccaneers being 2-0, anything can happen. You certainly need to be prepared for the worst. I certainly am. So that's Bitcoin. What about this dominance report? So I kind of gave you guys a sneak peek yesterday on this report I've developed. Obviously, it's kind of more for my own investing, but I like to share stuff with you guys. So what does this show us? So as we know, we see a lot of Bitcoin market cap dominance out there. And, it dropped down to a little under 40%, got to like 35%. Now it's creeped back up near 60. You see that all the time. Even the Roger Ver and Tone Vay's debate on the cruise ship, they were very much talking about Bitcoin used to be 100% dominant, yada, yada, yada. So it's certainly a talking point. I mean, market cap dominance in and of itself is not that important. But here, what we're doing is we're looking at volume dominance as well. So the exact same method to calculate market cap dominance, I'm doing to calculate volume dominance. If you look at the bottom left-hand part of the page, you can see a line chart. So the green line is market cap dominance, and the orange-ish line is volume dominance. As you can see earlier on in history, Bitcoin generally had I would say a lot higher market cap dominance than volume dominance. And they both plummeted in mid-2017 as alts and ICOs gained a foothold, and generally been close to in line, but we've seen kind of breaks where volume dominance crept over, cap dominance. And recently, cap dominance has begun to shoot much higher than volume dominance. So what we're seeing is Bitcoin gaining market cap dominance, but not necessarily gaining the same volume share. So that's very interesting. So that kind of sets the stage a little bit. So on the same chart, you see that kind of blue dashed line. And what is that blue dashed line? That is if you just simply divided the cap dominance by the volume dominance. And this is the data is on the right-hand axis here. So it's a ratio, a ratio of 1 would be the cap dominance, and volume dominance would be equal. Usually not equal. The blue line is slightly above 1, which I kind of mentioned before. Cap dominance is usually slightly higher than volume dominance. But you can see it certainly dropped a bit in 2017 and the beginning of 2018 to lows not seen before, basically under 1. And it's been creeping back up ever since, as cap dominance has been outpacing volume dominance. And that we're actually getting very close to this ratio being higher than it's been in 14, 15 months. So I think you can make a very clear argument that the cap dominance is getting ahead of itself. without the volume dominance on the backside. So the interest, the activity is not being reflective of what's happening in the market cap. And that kind of leads me to the scatter plots up top. So this is what I begun to use, I wouldn't say necessarily as an alt season indicator, but as almost like a favorability. So what would I prefer to invest in, Bitcoin or alts? Now, this wouldn't be my only tool, but just one of many tools. So here, we look at the 3-day change on the left-hand side. So this is looking at, let's just take cap dominance. So market cap dominance as of today compared to 3 days ago. Did it increase or decrease? Look at volume dominance today versus 3 days ago, increase or decrease, and then basically plot that. And I have the current, you see the blue dot, but then I also have snapshots going all the way back in time. So I kind of put also, where was it 3 days ago, 14 days ago, 7 days, and 30 days ago. In the bottom left-hand quadrant, what this quadrant says is over this 3-day change period, that Bitcoin cap dominance declined and Bitcoin volume dominance also declined, which is important to note. That's kind of what you'd expect to see. As cap decreases, volume or activity should also decrease. And we can kind of go left to right. 7-day change would be today compared to the cap dominance 7 days ago, et cetera, et cetera. Just different ways of looking at it, different windows. Now, what's really important is I'll talk in north, south, east, and west. So the quadrant I was just talking about, the southwest, is where Bitcoin volume dominance declines and cap dominance declines. That's typical what you should see if alts are doing well. There's nothing necessarily abnormal about that. And then northeast would be the opposite. Bitcoin volume dominance grows and cap dominance grows, meaning Bitcoin is doing very well, activity is flowing into Bitcoin, and it's being reflective in the cap. What's different is if you're in the other two quadrants. So let's take a gander, say in the southeast quadrant. So this means Bitcoin has actually been underperforming alts. So Bitcoin cap dominance has declined, so alts are growing faster, but Bitcoin's volume dominance is growing. So there's growing activity and interest in Bitcoin. So there's a mismatch of sorts here. So generally, the way I would look at it, if you see a lot of indicators, especially the current across both 37 and 30 in that southeast quadrant, that would tell me that potentially Bitcoin might outperform. There's a lot of activity and interest in Bitcoin, but it's not being currently reflected in cap. So that would be a sign, okay, maybe I want to tilt a bit more in Bitcoin. That's just my own personal opinion, not financial advice. Therefore, on the other side, the northwest side, where Bitcoin cap dominance is growing, but its volume dominance is declining, meaning the market is taking a risk-on appetite. Its Bitcoin is going up. However, there's not a lot of volume. The volume is actually flowing slowly into alts. My opinion, again, would be a good time to buy alts. Alts are lagging, but there's activity, there's interest there. Therefore, it could be a good time and potential time for alt season. So also on the bottom, call it middle of the page on the right-hand side, just a various snapshots so you get an idea what Bitcoin dominance is across cap volume and with that cap volume ratio. But here's what's interesting too, besides the addition of volume, is I sliced and diced it amongst the top 10 coins, top 100 coins, and all coins. Generally, when you just see it posted, people are just talking about all coins. That's only part of the story. You want to know how it's doing against different sectors, segments of the market. So you can see the top 10, top 100, all coins. I got all this coded in R, so it's just a matter of me hitting a button, and I can run this all day, any day. So hopefully, if it's of use to you guys, I will continue to share it. Let me flip back to I got a chat saying my video feed is not updating, so hopefully that wasn't too bad. Let's see where I'm at now. Yeah, it's blank. So and I apologize for that. What was the last thing you guys saw? I'll flip it to the quant model here real fast. So I apologize for that. So I'll have to check to see what was actually being shown. The PDF page. Were you able to see the Hester Pierce stuff I put out there, or was it just the last PDF page? Okay, so you got the Hester Pierce stuff. You just didn't see my Bitcoin dominance thing. All right, so let me see what we can do. I'll talk about the model here and kind of what I'm seeing here, and then we'll flip back and I'll try to pull up that dominance thing again. But either way, you'll have access to all that stuff. I apologize. So, I might actually get some thumbs down now. Ah, damn it. But anyways, so the quant model here, you guys have seen this many times at this point. What's interesting here is, things like loop ring is number one. I actually have some orders in that right now. Hopefully they're getting filled. So feel free to front run me, or maybe I'm shilling it, whatever you want to call it. But you can see the favorable coins up here. Again, I like to have 5 to 10, usually in the top 25%. But I'll get to some that the model likes and dislikes in a second. In terms of performance, it's interesting. So this is, as many of you know, I actually manage portfolios for a living. So my goal in the portfolios I manage is not to make positive returns all the time. We have benchmarks, whether it's the S&P 500, a small cap benchmark, a global benchmark, whatever it might be. Our goal is to beat that. So it's very similar to what I'm doing here. I'm trying to beat the crypto markets. So the crypto market here yesterday was down 6.71%. The top 10% of my model was down 5.12. So in my book, that's a win, because in this, I'm trying to be long crypto, but trying to beat the crypto markets. So certainly a pretty good day. The worst coins did very terribly today, almost down 9% from the model. And once we back into September as a whole, the model itself is down 10%, the top 10%, a little bit better actually in the 10 to 25 percentile range, both crushing the entire market, the crypto market. And the worst 10% coins are getting smashed. They're down almost 30% in September so far. What about some coins that the model likes? You have Augur here. That is one of the top coins. What's interesting here is it's a very low risk coin. Its liquidity is a little bit lower, which is actually favorable here. And this actually hasn't done that well recently in terms of both the past couple of weeks, the past couple of days. So it's kind of a counteract effect where it should kind of make up some of those losses in the near term. But really, it's low risk in the fact that it should do well over the next couple of days. This wouldn't necessarily be a hold I would have for the next 2-3 weeks, but maybe one for the next 2 to 7 days, perhaps. It should do fairly well. Loop ring, I mentioned, is one of the top holdings. It is number one in the model right now. The main reason here is that's a great combination of it underperformed today or yesterday, depending on where you are, and it has a tremendous amount of value. So basically, it's been very much beaten down. What's dangerous about a coin like this would be its valuation. In this case, it can get hurt a lot more if the market tanks, but if it recovers, it can do fairly well. So just keep that in mind. However, I like to trust a systematic approach. So I'm trying to load up a little bit here. Pundi as well. It's a very similar story to Loop ring. Underperformed a little bit today. Its value is very high. When you deal with low sat coins, they're kind of a blessing and a curse. They can move pretty quick, but it's kind of a pain in the butt to get filled. So just keep that in mind as well. And nothing bugs me. I have an order in that I don't know, 22 sats, whatever it is, and it keeps hitting that, but my order doesn't fill. Like, you gotta be kidding me. I'm right there, but nothing happens. In terms of hate, there's a lot of coins that have done really well over the past few days, whether it's app coins, Poa Network, Chainlink. You can go back to the first page. You can see the whole list of them. Basically anything that you saw went up 20, 30, 40, 50, 100%, if not more, should continue to kind of reverse a bit. Chainlink, as an example, has terrible value. It had a really great 2-3 weeks, almost a month ago. So there's not much upside there right now. I think that's a coin perhaps I wouldn't necessarily buy now, maybe not for the next 2-3 weeks, but as the market turns a little bit, that might be a decent buy in a month or two. Chainlink also has pretty low risk too, so that could be a fairly safe holding. And you got a bunch of coins underneath, whether it's Bitcoin. You can see Ripple. I've been owning that first time ever since I started running this model. It's been doing pretty decent. It's pretty low risk coin, believe it or not, and it's done. It's kind of held up pretty well. Ethereum is actually pretty high up in the model as well. So it's challenging because a lot of people view Ethereum as like a true alt, which it is, but it's not the same risk category as most other alts. It behaves a bit different, a little lower beta in most cases. But again, feel free. I posted all this on the Google Doc, so you can definitely jump in and check it out. All right, I'm going to see if I can pull up what I had before, and we'll kind of go from there. All right, let's see if this shows up. All right, so this is what I was talking about for a while, and you guys probably didn't get to see it, but I don't necessarily need to go back over it. But generally, I think the key points here would be, if you look at the scatter plots, the three up top, the different time horizons, but showing the same concept. If you're in the top left box, that's potential alt season because Bitcoin dominance is growing, yet Bitcoin volume dominance is declining. If you're in the bottom right-hand box, that could be a good time to buy Bitcoin versus alts. Why? Because Bitcoin cap is decreasing, but Bitcoin volume is increasing. And then there's a bunch of other goodies here, whether, like I mentioned before, you can see it first top 10 coins, first top 100 coins, market cap, volume, sliced and diced a variety of ways. Certainly apologize that you guys weren't able to see it and you got to see a black screen for a while, but for those that watch and for those that are watching, thank you. I appreciate it. If those that are watching, if you have any coins, I'll be happy to kind of talk about them real fast. If not, I'll let you guys go. And hopefully the markets do a bit better tomorrow. No, I've just pulled up the price. It went up $30. So that's not too bad. Again, like I mentioned before, certainly no worry for me in terms of Bitcoin, at this point in time. Yeah, it's kind of crazy because volatility declined so much that people are getting all worked up about $100, $200, $300 move in a day. That's, like I mentioned before, you should expect that 2-3 times every 2 weeks. So nothing to worry about. Okay, so we got a couple coins, Bitcoin and Tezos. All right, so I actually don't have Bitcoin up here right this second, but I can get it for you in just a minute. Bitcoin's actually a coin I still own. It kind of fell down in the rankings a little bit, but not too bad. I will. Sorry, I'm working as I'm pulling this up. All right. So let me flip the screen back for you. Sorry about that, but I got Bitcoin up. All right, so Bitcoin is right there in front of you now. So it's basically, that's still well above median, so better than 50th percentile. It's 30th right now, so it's not a screaming buy. I still like it. Today you can kind of see what happened. It's been around 29, 30 sats all day. It's kind of held its value pretty well. So it's definitely a lower risk coin, despite it being a lower sat coin. In terms of any great indicators, there's really nothing there. So I don't think it has tremendous upside right this moment. But it doesn't have that much downside either, which means it's a pretty decent play, to be quite honest with you, which is why I have it in my portfolio. Kind of getting some upside with alts without a lot of the downside of other alts. So yeah, so of my portfolio, out of my 10 I hold, it's still right in there. So yeah, I would sell it. I don't have necessarily a price target because it depends on the market. So that's something to keep in mind. Most traders would say they have a price target of X in terms of sats or US dollars, where I don't. I care more about the market. So for example, if we have a great day tomorrow, the market goes up 5% and Bitcoin goes up 5%, then that doesn't mean anything to me. That means it just performed like the market. But if Bitcoin goes up 20% and the market goes up 5%, then that's a sign it outperformed. I need to trim it. So it's very market relative. And so I keep that in mind. Okay, column 41, that was another request. So we have kind of the mainnet news. So it's done really well recently. If you recall, if you go back the past few weeks of me running this model, XTZ was in my top 10 percentile for quite some time. I owned a bit. It's been solid. You could see the momentum here when you're looking at 2-3 weeks ago. It's one of the top momentum coins. It's been fantastic. So that's still in its favor. But the downside here is it's done so well recently, it's probably going to give a little bit back over the next day or two. And again, when I say give back, it's relative. So if the market's up 5, doesn't mean it's going to be down 10. It means it might just be down 2 or up 2 or up 3. It's just going to underperform. Now, at least that's what the model thinks it's going to do in terms of reversal. But its momentum is still strong. Its valuation is still above average. And, it's a fairly liquid coin, even though it's not on a ton of exchanges. This is not a coin I necessarily would buy at this point, especially with the news coming out. Typically, you see a dump as well, so I wouldn't be shocked to see that happen. The model's kind of giving you an indication of that, especially with the reversal indicator. So I'd be pretty cautious with XTZ. Where do I see ETH headed? Well, that's interesting. I mean, that's kind of the whole question, really, because most alts are being driven off ETH. And I mentioned before, one of my tweets, I think it's kind of in a weird cycle right now where a lot of altcoins raised a ton of money in ETH. ETH began to come down and they started selling, putting pressure on Ethereum going down, which by then that makes the treasuries in these other altcoins get weaker, which makes the platform Ethereum get weaker as well, which means they sell more Ethereum, and so on. The cycle keeps going and going and going. And here we are where Ethereum is about 190 some odd dollars. I don't think that cycle is necessarily over. I'm certainly not as bearish as other people. But clearly, I think we're beginning to see the treasuries kind of weeded out here. I think we got to be getting close to the point where they're not just going to be discriminately selling Ethereum. They've either already done it a while back, or they've been smart enough to properly manage their treasuries, like Icon, as an example, who's actually buying back some of their coins. That being said, despite there being some potential selling pressure, there is no other platform coin anywhere remotely close to Ethereum right now. Whether it's thinking like EOS or anything like that. Like I have certain favorites out there, like VeChain is one I think will do fantastic. But Ethereum is so far and above everything else that valuation and relative valuation certainly comes into play. So something like Ethereum should easily be 4, 5, 6, 7 times what EOS is. That's nothing against EOS. They're just at totally different stages of where they're at. So can the market keep going down? Absolutely. But do I think Ethereum's going to lose more than any other coin? I think we've kind of gotten past where it's going to get crushed a bit more than other coins. But it's still very beholden to the overall market forces. I'd be shocked if it went more than 150 lower than that, though. I think what we clearly saw over the past few days is that the bulls kind of let the bears have their day and you'll push it down. But clearly there's still enough interest in both the apps and platforms that they're not going to allow the biggest platform get ridiculously cheap. So even like 190 isn't actually really a bad buy. It could certainly go lower, but I'd be pretty shocked if it's not greater than 190 in 3, 6, 9, 12 months. VeChain, so that's actually not my model. So my story would be more fundamental. The reason why VeChain is not my model is due to the ticker coin change and the swap. So a lot of the metrics basically got screwed up when they took 1 VEN and gave you 100 VET. So that's why it's not a model. But from a fundamental standpoint, I think it's one of the best coins out there. A perfect blend between kind of the marketing you need in cryptocurrency and also kind of the real world application, whether it's the DApps that are coming on right now, the ICOs they're doing. They also do tremendous things with supply chain, a lot of great partnerships. It's easily, to me, one of the most undervalued coins. I don't have all my notes in front of me, so I'm just trying to speak from memory, but I have no problem thinking VeChain is a top 5 project out there. And one thing, they have a lot of X nodes locked up. Other nodes not locked up. I don't have the exact number, but people were saying like 60-70% of the supply is locked up in nodes, which is quite a bit. So you have a pretty investor-friendly model they've built, and clearly there's a lot of enterprise that love them. Now, from a macro picture, you do have some risk, whether we're talking like China, et cetera. Who knows what will happen, but clearly hasn't stopped them so far. They have a lot of demand, a lot of partnerships, and they're just humming along. So definitely one of the top projects. And people say, you've seen things where they took a snapshot of the previous top 10 or top 20 a year or 2 years ago, and you could see 70-80% of those coins are basically non-existent. And if we just joined crypto 6 months ago, you probably wouldn't even heard of 3/4 of the top 10 2 years ago. And I think there's a decent chance you're going to see the same thing, but coins, in my estimation, things like VeChain and Icon, very strong coins that in a lot of ways are run like a business and less like a crypto, which is a good thing for staying power. My top 5. Well, I think what's tricky is what I wouldn't say I'm qualified at, is determining what the market will perceive the difference in value between different crypto sectors, whether you're talking like currencies, whether you're talking platforms, whether you're talking privacy coins, kind of more enterprise related coins. It's hard to know which ones are more valuable than others in the long run. Clearly Bitcoin is up there in terms of like enterprise coins. VeChain is certainly, up there. Ethereum, it's hard to doubt it at this point. It has most of the market share. But there's certainly other coins out there that arguably have better technology. So out of that, I wouldn't be shocked to see one or two basically take control, but it's hard to say at this point. You're kind of throwing darts in a lot of ways. So I wouldn't put all my eggs in just one, platform coin, unless you have something like VeChain that can do multiple things. You have something like Monero too. I think that's a lot of staying power. I wouldn't put it in the top 10 or top 5 for that matter, but potentially top 10. I don't think that's necessarily going anywhere. Litecoin, I'm not really a huge fan of as an example. So not that I'm a Bitcoin maximalist by any stretch, but within the currency segment. So when you're looking at like Bitcoin, Litecoin, etc., like the actual peer-to-peer currencies, I find it hard to believe we're going to have a ton of them. So over time, whether we're talking 2, 3, 4, or 5 years, one coin is going to continue to gain share, and I wouldn't be shocked. And that should be Bitcoin in my estimation. I think there's certainly a niche for privacy coins, though. Thank you for the question. Oh, do you have a top 5? What coins do you like, if you don't mind me asking? Like what I get torn about is like a coin like Nano that has pretty good technology. It's kind of hard to debate speed and low fees, but is it really going to overtake Bitcoin? I certainly don't think that's going to happen. And can it have a place as transactions, pick up in the crypto world? Maybe, but it seems a little bit redundant. Yeah, AI is good too. I wouldn't necessarily put it in top 5, but I mean you're kind of creeping in the same kind of enterprise segment. Like I think the projects you mentioned in the chat, Bitcoin, Ethereum, AI VeChain, OneChain, and BAT, where I think they're all fantastic projects. I mean, if I was building a portfolio now, I don't think we're quite at that stage in crypto where diversification among sectors is that important. And you do have a little bit of overlap between like AI and like OneChain, maybe even VeChain a little bit. Kind of enterprise, blockchain, interoperability. I can't even speak. But I think they're all pretty good. They're just going to be competing against each other in some way, shape, or form. And, I think BAT is a great coin. Honestly, I think that's kind of nichey. So that kind of goes back to like the top 5 question, where something like BAT, I think, has a pretty solid future. But is something like that really going to be one of the top 5 cryptocurrencies once the cream rises to the top? I don't think so. To me, that's maybe more like a top 20, top 25 coin. But I think the risk there is a lot lower than other top 20 or 25 coins. All right, guys, I appreciate it. Thanks for joining, and I apologize for the outage. Certainly retweet and subscribe if you haven't. So I will talk soon, and you guys take care.